Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Friday, February 6th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So Metals Minute, episode 591, and that's probably about as many times as I've been on CNBC, Fox, and Bloomberg as well. So looking at the overnight headlines, the impact on the market, the risk events, the rundown on the precious metals. So the key theme of this week has been volatility, and not only volatility in the precious metals markets, we've seen an uptick here on the futures contracts and the equity markets where these tend to teeter, where you get that Russell volatility, that NASDAQ volatility, S&P volatility, pushing right up into another level of regime where the volatility really picks up, and that's where you get some erratic movements happening. We look at earlier in the week here, natural gas futures falling about 30% on some projected warmer weather here and a big collapse there. We saw crypto volatility pick up as well. And volatility is one of the things that I really watch in these markets. I think it's key to understand what the market conditions are before placing any orders here in the markets, because of the fact you really want to adjust your position size based on different degrees of volatility. So silver's elevated volatility really puts some of these leveraged ETFs in the spotlight, and it's the growing popularity of leveraged exchange traded products making these price swings more violent than ever. You go to something like the 2X ProShare Ultra CTF, they had to mechanically reduce their futures exposure as part of a daily leverage reset. If you're going to be involved with some of these 2 and 3 times leverage products, do not, as far as my opinion, hold these things for any duration of time, because that's not what that vehicle is intended for its use. What it's done is it's unleashed a wave of selling in an already crowded market. So you get this record wave of purchases of call options. They really set the conditions for silver's rapid not only rise but also fall, with the dealers rushing to hedge their positions by buying the underlying asset as prices move higher. That's why I monitor the dealer gamma exposure and report on the S&P 500 and some of these different markets here on a day-to-day basis, and really could care less about some of these narratives. I've got people sending me fake AI videos on a weekly basis that the COMEX is going to collapse, meaning the last I checked here, CME futures stock, $300, all-time high on that stock, looking fantastic. You want to send me something interesting? Send me that dealer flip line on the silver market, because I'd really be interested to see where it goes from negative gamma onto where it goes from positive gamma here, because what will end up happening is you're going to have those dealers forced to buy the underlying asset when prices fall and sell the underlying asset when prices rise, and that's going to help suppress some of the volatility in the silver market. And what that could do is we could get some consolidation in prices, and then we could get that next movement on up. If you look at where futures are at, you get this crazy negative gamma here. Well, that's going to magnify some of the volatility in the market. Now, speaking of volatility, looking at Bitcoin here, bouncing back, you do have a 50% decline from its all-time highs to where it's at now, coming back down to about 62 to 60,000. Question is, can 60,000 hold? Not a recommendation out there to the public, just an observation in these markets here, because of the fact we're seeing crypto funds have some of their biggest outflows since November, and Bank of America reporting that the money market funds are actually attracting the most inflows along with U.S. equity futures. So there's a big rotation that's happening in a lot of these different markets. Now, getting back to the metals markets, April gold low overnight, 46.70, high in the session here, just hit a few minutes ago here, 49.2570, up about $27 on the session. You look at that contract high, 56.2880, seen on January 29th, and the 10-day average true range, $264 a day. So quite a bit of movement in there. But if you look at the GVC, that is continuing to decline overnight. So gold starting to compress just a little bit here as far as some of this volatility is concerned. You look at March silver, the lows overnight, 63.91. The high in the overnight session, about 75 bucks, and futures sitting at about 74.13 last. The 10-day average true range, $13.04, and silver volatility at 96. Now, yesterday I mentioned the possibility of the range-based volatility from 70.32 on up to 105.54. I said that both of those could be in the realm of possibility. Well, it was unfortunate that was the low end that really came in at 70.17. So I run these volatility-adjusted tactical ranges that I've been building over the last several years here, that we provide these to our clients on a daily basis. So if you look at today's tactical support 1, came in at 63.36, and this is calculated based on yesterday's volatility range. That matches up with basically where the overnight lows were at. Tactical resistance one stands at $76. We're about $1 below that at the moment here. If we could break through that level here, it opens up the door for a possibility to test about 81.65. So if we'll see if we can make a successful run during the day's session. You look at those ETF flows here where traders bit scared, bit lightening up with the volatility, so they're selling gold, silver, platinum, and palladium. You had gold ETF flows decline about 0.1%. Exchange-traded funds cutting about 63,000 troy ounces of gold in the previous holdings. Fourth straight day of declines, longest losing streak since October 29th here. In total, gold held by ETFs up about 1.1% this year. I'd like to look back where we were at last year and see what happened in January and February and where things took off just for an observation purpose. Nothing actionable whatsoever. You look at the silver, the ETF flows declining about 0.1%, and year to date, never really turning positive. Even after we had that big $13 million increase in the ETF flows, they're down about 1.8%. The ETFs cut about 1 million ounces. Something interesting, again, not actionable. You look at the gold-silver ratio, 66-1. So continuing to jump up, was about 62-1. You go back about a week ago, it was about 45-1. That was right around the lows that we've seen recently. So we look at the macro markets, the equities, well, 70% of the S&P 500 has reported earnings so far here. 289 of those companies have, with 78% of them here beating analyst forecasts, and only 17 have missed. Now, next week, we're going to have about 8% of the S&P 500 market cap reporting. Now, economic data, if you know me, I like to study some of the stats, the economics. I went to Purdue. I triple majored in finance, marketing, and economics, and I love economics, especially global economics. So it is the first day of the month, but we're not getting the non-farm payroll numbers. So earlier in the week, that Bureau of Labor Statistics said the January report would be delayed due to the partial government shutdown. So boo-hoo. You look at the University of Michigan provisional reading on consumer sentiment. We'll get that, but that data has been awfully sketchy recently here. So the rate cut expectations. Now, this is interesting. Starting to jump here with that CME Fed watch tool, looking at that March 18th meeting, about a 16% likelihood that the Fed will cut 25 basis points. You go out to June, that's when it's supposed to be past Powell's prime here. You're going to see that June 17th meeting about a 75% chance. So I would circle that one on the calendar as that first interest rate cut, and then most likely we'll get it in December. Now, you'll get the dollar index basically unchanged on the day, 97.71, the euro 118.11. WTI crude oil futures, if you're trading in that market, been trading between that 60 and 65 level here, a bit elevated with some geopolitical tensions rising, a bit of a decline here on some of the inventories recently. We're below the 5-year average here on where total inventories are at. We've seen some big drawdowns here in API, also EIA recently. So we do have this meeting with the U.S. and Iran in Oman over the weekend. 10-year Treasury yields. Now, this was a big standout yesterday because where did some of these traders go into the market? Well, they went back into the bonds and the treasuries, the TLTs, and things like that, because we saw treasury yields drop to about 4.21%. So it was a big drop since yesterday, but the yield curve continuing to steepen, and it's at one of the steepest levels in 4 years, really meaning that you've got that 2-year anchored here, meaning the Fed's going to cut rates and it's set to go. And then you look at growth going forward, continuing to rise, and that's where you get that long end of the curve continuing to pick up. VIX futures here sitting at about 2015. So the high of the overnight session was 2214, low is 1999. Question is, do we break below 20 and hold below it for the duration of the session, or do we poke above it a few times and back and forth? But if we could start to work our way down here, you should see some normalization take place in the U.S. equity markets. You got the S&P 500 up 35, that's 0.5%. The Russell up 1.2%. Big jump overnight here, and a lot of people piling into that Russell in that overnight session, with it getting down to about 25.66 and at 26.18 here last. Now you look at some other things. Bitcoin, 66,450. Gonna have to wait for some higher lows to come in the market to really get me interested in that market here, because it's been a bit of a bloodbath here. And then S&P gamma exposure, well, it is still negative here at the moment. Europe and Asia, that's where I always check to see what's the temperature of the global markets here, because many of these different international indices are continuing to march higher, make all-time highs, and they look really good. So, you know, when you see the questioning about Greenland and Denmark and Belgium and stuff, do yourself a favor and look and see what their stock indices is doing, because I think if we were going to go to war over Greenland, some of those stock indices would probably be selling off, not making new all-time highs or at or near all-time highs. So you go to Europe and Asia, European stocks, they recouped their losses. Asia stocks, they also paired those initial declines here with the MSCI index dropped as much as 1.3% before closing, near unchanged on the session. So I hope you guys have a great weekend. Probably going to do a write-up here on Kitco with regards to a strategy with a 100-ounce silver contract for some of the participants looking to get involved with that. And the thing is that people look at this 1,000-ounce contract, and when you get to $12, $13 moves per day, that's $13,000 per day as far as the average true range. You start to look at the 100-ounce contract, well, that's going to be about $1,200, $1,300. And the thing is that you could add 2, 3, 4. You could right size the position for your level of comfort if you're trading in the futures markets for some of that volatility. So I anticipate a lot of people opening up accounts just to get involved with that particular market here. So you guys got any questions, shoot an email. You love to open up an account with us, send an email to info@bluelinefutures.com. And remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.